is that basically, the denominator is kind of in a sustained debasement mode, which, to some extent, it always has been. Fiat currency is always weakening. But basically, when you're running these high of structural deficits, that background level of debasement is faster. And so my general argument, like the key thing that I've been focusing on in my investing is that we're in a hotter nominal GDP and a hotter like nominal asset price environment than we would otherwise expect if we were running 3% of GDP deficits rather than 6 or 7% GDP deficits. And I think that investors of all types, whether it's TradFi or in this space, should be mindful. If the U.S. runs big fiscal deficits but has tight monetary policy, like we saw, for example, in 2022 and 2023, that tends to be, ironically, a strong dollar environment, which can impact a lot of emerging markets and slow them down because they have dollar-denominated debt. On the other hand, if you're running pretty hot fiscal, but then you're also supporting it with monetary weak, like dovishness, that tends to be very stimulative across the board. That's what we saw in 2020 and 2021. And so to get to your question, 2020 and 2021 were kind of like everything up. Like almost every asset is up. Um, whether it's high quality stocks, whether it's like entities playing around. And I think that this cycle is going to be probably more dominated by larger pools of capital, so institutions coming in. And then to the extent that we get retail back into the space, probably after fresh new all-time highs, I don't think you're going to see the indiscriminate buying across the board. And I think there's going to be an emphasis on quality. So the things I tend to focus on are Bitcoin and then stable coins, which are obviously not really investable, but you can look at the rails that they run on and that kind of thing. And real world assets, things that are actually solving problems and expanding markets is how I tend to view the space primarily. I think there's more of an emphasis on not just speculation in this cycle, but on what if you're a stock and if you run a stock fund and you happen to be bullish on either Bitcoin or the space. One of the only avenues they can express that view is either the miners or MicroStrategy. Currently, there's not that many ways for them to express bullishness on the rest of the space. There's not really like that companies that are heavily engaged. Maybe Coinbase is probably the best way they could express that. And then same for bonds. So MicroStrategies, for example, issuing bonds, convertible bonds. So if you happen to be a bond investor that happens to like the space, that's one of the avenues that they can express it. And the high premium to NAV shows that there's a lot of build privacy policies, regulations, prosecutions are going to continue. So you're going to have an adversarial environment on that side. And therefore, there's still an ongoing need for any sort of cypherpunk development across the board. I think that the main area where a Trump versus Harris election matters for this space is mostly in the crypto securities, like mostly in the SEC type of stuff. Like what is allowed to exist without being heavily fined or gone after in some significant way. Like what can you tokenize? What can you sell to the public? I think that's probably where this election has the
About a year ago, Kustadin reached out to me because I've been translating a few other books about Bitcoin in Bulgarian, and he said, like, we really have to translate this book and make it available in our country. And for our audience here, I want to ask you, why did you write this book? Since there's so many already other books, right, about money, about Bitcoin in general. Why did you feel the need to write this book, and who is this book really for?
So I was resistant to writing a book for a long time because it's a very tedious process and generally low ROI compared to other things you can be doing. And so I didn't write a book. There are other fund managers or people in their organization. So whether it's professionals or whether it's a retail audience, that's really kind of how the book is targeted. Anyone who really wants a foundational understanding of money, finance, and then extending into digital assets.
Absolutely. Thank you so much. I think this is so necessary as a base of knowledge that many people take for granted that they have, and that I think it's not really the case. So sharing my appreciation for the work you have done and the work that we're bringing here to Bulgaria. Okay, having said that, we're going to open it up in case people in the audience have any questions.
All of that fiscal deficits. But we're seeing kind of early signs that we're probably past the peak of credit tightness, and we could see another positive credit cycle, which is that more entities taking out private debt, basically on top of this fiscal environment. Um, and so I think that whether or not we get an inflation cycle will partially depend on China and U.S. fiscal policies, the credit cycle, and energy. So I think that my base case is just stickier above target inflation, and I would call for a second wave of inflation only when I saw more tangible, small. But the fact that one of the use cases of Bitcoin is that you have your own global capital, and almost any urban center you go in the world, you can eventually find ways to exchange your Bitcoin for local value, whether it's exchanging it for the local currency or exchanging it for goods and services directly. That's something you can do with the asset that you can't do with like an ETF or a share of the S&P 500 or something like that. It's a bearer asset that the fact that you can offload it in a variety of different markets for direct or indirect purchasing is a key feature out of it. Um, and I think that a lot like this is obviously it's massively impactful for any people in the region that are directly affected. I mean, it's a human it's a human rights crisis. There's just war is a horrible thing. Whether it's in Eastern Europe or whether it's in the Middle East, the fact that these wars are going on are massive human conflicts. To the extent that they're relevant for global investors or from a macroeconomic standpoint, the key question to start with is, what are the probabilities of impacting oil flows? Whether it's Iran sanctions, whether it's a tax between high interest rates. The same thing's true for Japan, even more true, because they're even deeper into fiscal dominance. Um, Europe, it depends on the country, and then there's the eurozone as a whole. But in general, that's probably more mixed in terms of whether high rates are inflationary or disinflationary. The complicated part is that we have to look at the global perspective. So because a lot of countries in the world, especially emerging markets, have dollar-denominated debt, the interest rate policy affects them. And the majority of global population lives in what is classified as developing countries, and that's where the marginal global GDP growth comes from now.
It's like more bullish or bearish? Just your thoughts on that topic. Thank you.
I generally view it as probably more bullish, and I'm looking for global leadership rather than like U.S. economic leadership. So rather than kind of the U.S. pulling the world along, I think that kind of like the 2001 to 2007 cycle, that was a period where non-U.S. entities were kind of ahead and pulling the U.S. along. So I think that's a realistic possibility of the next few years, which is that the U.S. kind of softens or doesn't particularly flourish per se. Um, but that the fact that a lot of countries have gotten through a tightening cycle, through some of that accelerated expectations, kind of renormalized. And a key metric that I look at is market value versus realized value. Um, and you can apply that to any asset if you have the data for it, which is to say the market cap compared to what is effectively the on-chain cost basis, or the aggregate dollar value of coins, not based on the last time they moved. And generally, whenever you get a high market value compared to that cost basis, you're more prone to corrections, because some of that inflated value is not real yet. It's not really been actualized and traded around with high volumes at